Hi, my name is Scott Dahl. Thank you for tuning in to another one of my podcasts. I'm recording this on Tuesday, July 8th, slightly after 10 o'clock Pacific time, so the market is trading. We are in a cyclical bull market. We are in a very strong cyclical, that's a shorter-term bull market, in a longer-term secular bear market. Secular would be long-term. This secular bear market is going to be punctuated by high inflation, high interest rates, similar to the 1966 to 1982 period. If you would like to explore this in more detail, you can go back to my podcast called Secular Bear Market, and this will show you what I'm talking about. So I'm going to go back through some previous podcasts and take a look at targets and explain to you on the chart of the Standard & Poor's 500 why I think we're going to continue to move higher. So if you take a look at the chart I have up on the screen, this is a daily chart along the bottom of the months, May, June. This is 2024. Here's January of 2025. Then we're going all the way over to the current trading activity, which is right here today, July 8th, and we're trading at 6,230. What I've put on this chart is I put arrows of where I did previous podcasts. This is a correction in this ongoing cyclical bull market. Corrections are very important because what they do is they purge the speculative excess, which allows the market to move higher. This is one of the fastest recoveries off a sell-off that we've seen in the market. There's a lot of power behind this on the upside. Also, if you take a look at the chart, the recovery mirrors the ride down. Not perfectly, but you can see what I'm saying here. So that's another positive sign. On May 31st, I put up a podcast. I had a target in the podcast of 5,036, a bearish target. And that would be right down in this area here. Then what we did is had a significant washout. So it was this massive volume. Everybody gets out at the bottom because people do the wrong thing at the wrong time. Traders do. So everybody got out at the bottom, and that refreshed the market so people could come back in and the buyers could come back in and push this market rapidly higher. I identified a pattern here called an island. An island is a bullish phenomenon. That was on April 30th. That was titled An Island in a Stormy Sea. This technical pattern gave me a target of 5,902, which is right up here. So that target was achieved. On the date of May 12th, I did another podcast right here saying, is the market headed higher? My assumption that from this technical analysis that it was headed higher, the probabilities were showing as such, and the target was 6,285. Well, I want to put this up now because we achieved that target of 6,285 right here. July 3rd, the high was 6,284.65. Well, so we're pretty close to it. I'm going to say we achieved that target of 6,285. Then I put a podcast up on June 12th, which is right here, represented by this arrow. I titled it, Is the Stock Market Headed Higher? And I got a target on this day of 6,807. I'm going to tell you that might be a little too aggressive at this particular point in time, but I do believe that the 6,285 that we've met, or this right up in that higher 6,200 level, is probably going to create some form of a resistance. However, I do think longer term that we have the potential of the 6,800 level. I don't know exactly when, but I think that's where the probability from this technical analysis is where we're headed. Now, why do we use technical analysis? Because everything that's happened in the stock is presented in pictorial form. We have a tendency to see repetitive actions in the market and in prices, and that's how we can get these targets by looking at the technical formations. With that said, let's look at flags. So we've got a flag here. So what a flag is it's a counter trend move. So now we're headed up, right? So you go up, then you go down for a while, then you shoot up higher, then you go down for a while. It's kind of a stair-stepping formation. So I'm going to blow these up so we can see them. So you see, here's a flag. So we're going up. Here's a counter trend move. When you create a price gap, see, there's no trading right here in this level. When you create a price gap off of a continuation pattern, that's very bullish. So we did that. We went up here. We got in another flag formation. We broke out of there. We went up here. We got in another flag formation. So 1, 2, 3. These are counter trend moves. Last flag that we've seen, or the most recent flag we've seen, we gapped up out of there. So when you gap up out of a continuation pattern, that's very bullish. So we went up, we reached my price target, 6,285. We're probably going to counter resistance here. This is the top, so we're at an all-time high. More than likely, we're going to come back to this level and we're going to test this level. And that's kind of looks like where we're headed. So we should see this test. What I mean by that is we'll go down here and see if the market can push through what were recent all-time highs. But if this acts as support, which it probably will, then we should see a bounce and we should see a move higher. So this is a little different chart. This is a long-term chart. So each one of these green and reds represents a month. Remember the previous chart, every one of those greens and reds represent a day. Each one of these represents a month. We go back to 2007 on this chart, so this is a lot of data. What I wanted to show you, which was important, so remember this correction here? So this is the month of May. So this is April, this red down, and we had a massive sell-off, and then here's May. So May was the bottom of the sell-off, the culmination of the sell-off of this correction that we went through. And what I wanted to show you with this monthly chart is this actually stopped right here. This stopped at the top of January 28th of 22. So it found support there. So what we did is we sold off. We went all the way down to the top of January of 2022. So that when we corrected all that activity from January 2022, cleared it out. So corrections are an important part of the process, and that's what allows the market to go higher. And that's why we've had such a significant boost or run to and through these all-time highs. So we're back again to the Standard & Poor's 500. Here are the last 4 podcasts. Here's the numbers that I saw that the charts were giving us as targets. We should find support here. This is a strong cyclical bull market that should continue higher. I see no reason why it won't, as probabilities from looking at technical analysis. But now I want to show you 2 more charts. This is a chart of the New York Stock Exchange. Remember, the New York Stock Exchange is important to me because it has 2,038 stocks. It's broader than the Standard & Poor's 500, which only has a little over 500 stocks. So it gives us more of an idea of what the overall stock market is doing. We have a very nice picture here. We had this correction once again, and then we had a breakout over the all-time highs, which was put in back in December of 2024, and we've moved significantly higher. The highs are this white line, and so we're more than likely going to come back and test these highs. The final chart I would like to show you is breadth. So remember, breadth is extremely important to me. It always has been throughout these podcasts. It's important to the technical analysts. It's also very important to the overall market participants. Remember, the breadth is the amount of participation. It's the stocks going higher. You need a lot of stocks going higher in order for the market to continue to advance, and we have that. So we have new all-time highs in breadth, and we have similar bullish patterns in this chart of breadth, which is, again, participation. We've made the new highs. We're coming back to reset, and then we should go higher on breadth as well. So the bottom line on this presentation is we're hitting these targets that have been projected from my work in the technical analysis, and this is a cyclical bull market. This is an opportunity to make money. You should buy on healthy corrections if you're not already in. This is most important. You need to make sure that you're in the strongest assets in your portfolio within your risk tolerance. This is a momentum-based market. Momentum means the strongest stuff's going to go up the most, and you want to be in those strongest securities. That way you'll stand the chance of making the most money on this move higher. Strongest asset classes, they happen to be U.S. stocks right now, but you want more diversification than just U.S. stocks, but you want the strongest asset classes, you want the strongest assets in those asset classes, and that's the way that you'll make the most money. Again, confined to your risk tolerance. So if you'd like me to look at your portfolio, I'd be happy to do it. It's Scott at dahlcapitaladvisors.com, CAPITAL, advisors with an O. You can go to my website, Dahl Capital Advisors. You can call me 949-497-6366. So I hope this is helpful. Appreciate you watching. I look forward to putting more of these up in the future as this ongoing market develops. So thank you very much.